Today we're going to talk about the gap. We're going to talk about the biggest gap that we've seen between inventory and pending sales in the last 2 years, and this is significant. My name's Dennis. I'm with the Tuttle real estate team. Just want to give you a quick update and a little bit of a market prediction on what's happening right now. So if you've seen the news, you've heard interest rates have just gone through the roof lately compared to where we have been. We were at 2.5% and 3.5% for a long time, and now we're seeing actually as of this week 6.25% interest rates on a 30-year mortgage. We're just not used to that. However, when you look at the averages over the last 20, 30 years, we're still at a very reasonable interest rate. In fact, my first interest rate on my house, I think was 6.75% on a 30-year mortgage. So we're not unreasonable, but they have definitely increased. And what has been the result of that is we've had people been priced out of the market, and we've had a softening of demand. There are still a lot of home buyers, but there's not the demand that we have seen before. So the gap that we're talking about and that we're paying attention to right now is the amount of inventory growth. So inventory was up 25% in the last 30 days, and that's up 25% from the month before that. So we've gone from 1 month supply of homes to 1.5 months supply. It's a 50% increase in just the last 60 days. Yet in May, sales were down 6%. This is the first time in years that we have seen a gap between inventory growth and pending and closed sales. Up until now, those numbers have just been moving in step. If sales were down, if listings were down, sales were down. If sales were up, it's because listings were up. We can't sell what we don't have. And so now we've seen inventory increasing, yet pending sales decreasing, and that gap right there represents the amount of homes that are going to be available on the market for a buyer. In fact, at this rate of growth right now, we will be at 4 months supply of inventory in just 10 months. If it just continues to get up. And that's back to where we were in 2018, and it could change that quickly. It could change even quicker. Now keep in mind, a seller's market is anything 5 months or less. So we are not by any means seeing a real estate crash, but what we're seeing is more of a balancing, and prices we're starting to see more of a stabilization. I think what's gonna happen is we're gonna see prices kind of coast from here on out. We're not gonna see a crash necessarily, but we're also not gonna see this accelerated growth. I mean, we have seen prices go up $90,000 in the last 6 months, average sales price. That's more than we did all of 2021. So if you're thinking about buying, now's a good time to get into the market because you could actually get a home under contract. There are actually homes to choose from. You may have more than one house to go look at, which is a great thing. If you're a seller and you've been waiting to time the market and now say, hey, I'm gonna hit it when it gets to the top, I would tell you that you are there. So that's just where we're at. The gap is not a bad thing, but it's definitely a number we're paying attention to. And the greater that gap, the slower the market's gonna be. And that's what starts to impact days on market, sales price, all of that stuff. And so just wanted to give you a really quick market update. But this is a very significant number because we have not seen a gap like that in the last couple of years. And so if you have more questions, feel free to message me, put it in the comments, and I'll be happy to get back with you, have more of a discussion on this and maybe what this looks like with your personal situation, whether you're thinking about buying or selling, maybe investing in real estate. So I hope this helps, and we'll continue to move forward, and we'll talk to you soon.